Hey traders, David Frost with another day trading update using the S&P 500 E-mini futures contract. What I'd like to do is give you a couple of tidbits that relate to day trading, and we're using the E-mini futures contract as the vehicle, but the truth be told, it doesn't matter what vehicle you trade. All charts act and react the same way. As far as I'm concerned, a chart is a chart is a chart. Whether you're trading the S&P, whether you're trading NASDAQ, whether you're trading a stock, or any other vehicle that you like to trade, if it has a chart, it's tradable. What we're looking at here happens to be a 5-minute chart on August 9th, 2017, and this is the entire day from start to finish. The vertical line represents the close of trading the prior trading day. So you see where the first green candle represents the opening of trading today. The horizontal lines represent support and resistance for the day on the E-mini futures contract. These are institutional support levels. Since I trade in the E-mini futures contract just about each and every day, I do a lot of work to find what the institutional support levels are for the day. As such, I offer them to my subscribers, which gets sent to them right before the opening bell. Here's a copy of today's email that went to subscribers, and it's very simple. All it does is list the support and resistance areas for the day. These are price levels where first price will be drawn to and typically have a price reaction from in the other direction. We happen to be in a relatively compressed market right now, so some of these levels happen to be close together, but you can see the resistance levels that were prevalent today were 24.79, 75, 73, 69, and 24.65. Support levels are listed at 24.63, 24.58, 55, and 50. Not all these levels came into play today. However, if price should have traveled higher or lower, these are the levels that would have provided a price reaction in the other direction under most conditions. These are the same levels represented by the horizontal lines running across the screen, the ones that came into play today. Like any other market, price will run either to a level to the penny, but a lot of times will actually have some slippage up and down, meaning price will travel a few ticks above a level, a few ticks below a level, and in some cases even a couple of points above and below a level. As you can see, in the first candle of the day, the market opened up at 24.6375, right above one of the support levels, right below one of the resistance points. Price went up into a resistance point, traveled a little bit higher by a couple of ticks, and then in the next candle came back down, resting right on, making a low of 24.63. Price traveled lower and it went almost to the next support level. It made a low in this candle of 24.59 and a quarter. The next level down was 24.58. So we didn't quite get to the next level, and then price started traveling back up, and you can see that price did a ping pong in between the 24.65 and 63 level for about the first hour of trading. Once price got above the 24.65, which was a resistance point, it will tend to travel to the next resistance point. And you can see here in this candle, we hit it to the nose, making 24.69 on the button, and then price traveled right back down all the way to about the 24.63 area, and then back up to 24.69, traveled there for about 45 or 50 minutes, and then started to drift lower. And where did we find support? We found support first at the 24.65, going back to the 24.63, and then price ended up going higher. And into the end of the day, we took a little pit stop at the 24.69, but price was strong. And where did we end the day? Right up at the 24.73. Now, the reason I wanted to point this out is because traders have the ability to find specific support and resistance levels on their own if they understand what's important to the market and how the market trades. And this is what I teach my traders each and every day. As an example and a quick lesson on how and why we may find support or resistance at some of these levels, let's go over to a larger time frame so that we can get a better picture of the market. Here's an hourly chart, and you can still see the the vertical line on the right-hand side of the screen. So everything to the left is everything that happened over the last several trading sessions. And what you'll notice is there are specific areas that were important to the market, specific prices that were important to the market. This is the chart's way of telling you where price is important. Reading charts is like reading another language. If you can learn and understand how to read the charts just like another language, you can use that information to your advantage going forward. Let's take 2473 as an example. Look how many times 2473 was important on the charts. It's important to the market. It's the chart's way of telling us that this price level is important. If you look over here on the left side, you can see how many times this price was resistant to the market. Over here, it was supportive of the market, meaning price continued to bounce off this area for an entire trading day. That's telling you that price level is important. Go to a following day, it was again resistant to the market. You can see how many times price was resistant at 2473. Here again 2473, very important to the market. Again, on the right-hand side, this little circle down here, price is important at 2473. What that's telling you is that the likely scenario is price will continue to be important at 2473. How about 2465? Is that price important on the charts? Absolutely. Again, resistance, support, 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 support. On the charts, what was once support becomes resistance, and what was once resistance becomes support. And what that's telling you is these price levels repeat over and over and over again, and therefore we have the ability to identify when the likely scenario is that the same price will be either supportive or resistant to the market once again. So what I like to do is use the longer time frames, the larger time frames, such as the hourly chart, to find where the big money is telling us that there is either a resistance point or a support level for a particular price. We can use that to our advantage when we trade using the shorter time frames on an intraday basis, because it gives us a wonderful guide as to where the market is likely to be trading to and reacting from. Hopefully this was a helpful little lesson. It's only a snippet of some of the things that I teach my traders, and if you want to learn more, go ahead and come over to LazyEMiniTrader.com and I'll teach you more stuff on how to read the market and how to read the charts. I'm David Frost. Thanks for tuning in, traders.